But that profit and discount calculator, if you go there at any point in time and you're not in a shopping cart, it won't actually create that other little manual entry option. It just shows you, hey, you wanted to see what the 12.75 discount was? Here's what the calculation will be. It's smart. It looks to say, hey, is your shopping cart currently available? If so, I'll help you add this discount in. That's what it basically does. But some of you guys are working pretty fast, and I see your heads are already up. I'm just going to show you. I'm going to actually clear my cart, and I'm going to go to the profit and discount calculator, tools and maintenance, and profit and discount calculator. I have no cart right up here by my little icons. I don't have any cart. So anything I want to add here, I can do my same scenario, $350 and a sale price of $400 and a discount of 12.75 and calculate. Even though I entered this discount right here, you can see it didn't give me an add form to add it to the cart. It's like, oh, you don't have a cart, so I'll just do the calculation. It's pretty handy. You can actually tell it, hey, I'm trying to get to a certain percentage with a discount. So like it can actually back figure multiple different things. Say you were trying to keep a 20% margin, but you also wanted to apply a certain discount. It does all the math for you so that you could basically go, what would it be normally, plus a 20%, plus that discount, or basically minus that discount, and then get you back to the normal number you want. So just as you guys are doing it, I'm not asking you to look, I'm just going to do it. But say I wanted to maintain a 20% margin with a 12.75 discount, and I say calculate, guess what it's going to tell me? My price needs to be exactly $501.43, and basically it'll end up telling me all the different pieces so that I get that 20% minus even the discount, which is $63.93. It's a great little calculator. This is almost like a little Excel spreadsheet that's purposely built in for dealing with like calculations and different stuff. While you guys are building, and hopefully I'll keep talking because you're doing your own thing. There is a huge difference between a markup and a profit percentage. Huge. Often we will see a price and we're saying, say I bought something for $10 and I'm saying, hey, I'm going to mark this thing up 2.25%. It automatically would give you a new value. Matter of fact, I'll run a scenario right here just so you can see what it does. I'm just going to reset this page so it goes back to basically nothing. Say I have a cost of $10 and I wanted to do a markup of 2.25 and I hit calculate. Now this is the piece that's kind of interesting. This deals with math, and actually some people in business fail because of this difference. They're like, hey, I marked that up double plus a little bit. Okay? Well, if you come and look, it actually didn't do what you totally thought it did in some ways, okay? The profit percentage is only 55.56% when you thought you were doing it. The higher it goes up, the more you're kind of like, whoa, this is kind of crazy. So watch this. Instead of adding the 2 value, and this might make more sense. If I calculate a 25% markup, say you have a $10 product and you want to mark it up 25%, okay? Not a huge deal. You're going to be adding $2.50 to the end price, right? So $12.50. Watch. We're gonna do this calculation. Now this is the thing that's kind of interesting. It was a perfect 100. You're actually only making 20% on that, even though you marked it up 1.25. Okay. The higher you push that, it spreads it out. What you have to do is, this is business. Some people are like, oh, I'll just take this and I'll just take it times 0.25 or whatever, and then that's going to be my sale price. You're physically only making this because the cost has to be factored back into it as far as like what it actually does. Watch this. Say I mark something up 1.75 out of $10. That should add what? $7.50. So my price should end up being about $17.50. Guess what my profit percentage is going to be? Not 0.75. Watch this. It's surprising. This is actually a huge piece of business. I marked it up. One, cost of $10, the new price, is $17.50. I can figure that pretty easy, okay? By the time I come out of it, $7.50 is all I made on the profit. That is actually only a 42% profit percentage, okay? And the difference is they're totally different monsters. Like, I thought I marked that thing up 3/4 its value. But guess what? I'm actually making under half of what it physically was, okay? And once you start learning some of these concepts, that's where you're like, oh my goodness, this particular tool will actually help you do this. I still did the markup at 1.75. But if you were to run it back through the formula of how you actually figure out a profit percentage, it makes a huge deal, huge deal. Steve, can I actually have you make a comment on that? Steve was actually the one who showed me. I'm whatever. He's like, actually, if you do this, you'll be surprised because it's not what you think it is. And like, basically, it's because you have to take that cost back in there.
You mean as far as the 20 versus the 25%?
Yeah, the 20 versus the 25, the 1.5. You think you're marking it up. It cost me $10. I'm going to charge $5 on top of that. Well, actually, you're not making a 50% markup.
Yeah, so in business school, one of the concepts that they taught us was knowing the difference between what a markup percentage is and what your actual profit percentage is. And that's what this little calculator does. And like Brandon had said, most companies think if they mark up a product by 20%, they're going to be making 20%. But that's the markup. And a nice little exercise, if you have time later, is to take a piece of paper and just take like a $100 item, mark it up 20%, so it'd be $120, and then take a price to sell it at, and then take the total profit that you have and divide it back into what you sold it for. And you'll see that that comes out to be like, 17% or something like that on 20%. And you actually have to do a 25% markup to get a 20% profit, net profit. So that's one thing that I encounter a lot with businesses is they don't mark their services up enough or their products up enough to where they can be successful because they're thinking they're erring on the side of how much they're actually profiting based on what their markup is and not on what the net is. And we get into that a lot too on the income statement. If you do a sale, it shows up, you could do one sale in the system, and I know you're going to get into the accounting side, but as soon as you do one sale in the system on an invoice, you can go to the income statement and you can see right away what you've just done. Or the invoices also have a profit per line at the top. Might jump in too far.
No. Even cards do. Like right now, we have just been using canned items, labor, discount, freight, other. There's no costs involved to these things, okay? But as soon as you actually have real costs, your profit per line is very, very important. Very important. We haven't
shown that even with because it'll show 100%.
Yeah. Yep. I don't have a card, but I can make one in a heartbeat.
And you could actually do the advanced. Did you get into the advanced?
No, we don't have an advanced add to cart yet. Turn on. Okay, I have an item, and there's a view cart profit per line. Click. Alrighty, I'm on that page.
So that expected profit over there, and the profit percentage, that's how that's going to be calculated, is not based off of what the markup was, but it's going to be based off of what you actually sold it for. Does anybody know what the formula is to figure out how much you made on an item? You just take the selling, you take what the profit is, so you would know what your profit is. If you made $20 on $100, then you would just divide that back into $100. So right off the top of your head, you're going to think it's 20%, right? It's not 20%.
The problem is you forget the cost element that changes what's called your profit, okay? And if you want, I'm actually on the page that we were even talking about this, and if you're a reader, there's a ton of information below where we were doing all these little calculations. Guess what? How do you figure a markup? What's a calculated markup? What's a profit percentage? how it's a profit margin, you know, a price per margin. Like, we try to explain it, and then it actually has the formula right there as far as what some of the different things are and how things get, how we figure these things out. Okay. It's reading, but it helps people know. Like, sometimes they think, oh, 1.75 markup, I'm going 3/4 up. You're not making that much. You're really not. So,
You said cost, a profit divided by cost. What was the figure you just gave?
here's what it is right here.
By the sale price.
By sale.
Yeah.
Profit percentage, or your profit margin, equals profit divided by price times 100. This is your formula right here. Your profit percentage, or your margin, is this guy.
And your price is specifically the selling price.
Yep.
That's one thing too that, you know, you want to kind of have, you know, really fixed in your mind is that where we use the field that says cost, we're referring to the actual cost of the product, and then price is the actual price of the product. A lot of people get that confused. You know, like they'll want to set the cost and being the price and vice versa. I see that all the time. Another thing that's really interesting too is when you get to a lot of clients that are a little bit larger clients, they might actually belong to what's called a 20 group. Has anybody heard of what that name is, a 20 group? What a 20 group is there exists groups of businesses that will get together, and they call them a 20 group because they usually try to get 20 businesses together that are the same, from the same industry. So let's say car dealers. They'll get 20 car dealers together that are from different parts of the country, and they'll meet. And basically what they're going to do is they're going to share some of their financial information amongst themselves, and they compare different percentages, if you will, off of the income statement. And they have formulas that they will go off of that is meant to be, or they're kind of like the norm for their industries. And so then they'll talk amongst themselves, you know, on how they can bring these percentages in line with what's the norm for their industry. And when you get to our income statement, you'll see that a lot of the percentages that we show on the income statement follow that kind of 20 group mentality. So you're looking at like, how much of a percentage can I pay in payroll in all people? So if you take every expense that you have for people, they're all just their wages, and you would know immediately if you're falling in that group. Like I can tell you, in an automotive dealership, 35% is probably like the high end. You would want to really be down around maybe 20% on your people costs. But if you get into something that's more service, where you're not selling a lot of parts, you might go up to 50% on your labor. But if you hit that percentage, then your business is probably going to, you know, you're going to be in the margins that you need to be in to be successful. And there exist books, and you can probably even go online and find information about 20 groups, or you can find information about what the average percentages are for those business groups. And if you go for bank loans and things like that, or companies go for bank loans, that's what the bankers are looking at all the time too. They have books that, you know, say what you should be within all of your margins, interest, people, you know, fixed expenses and semi-fixed expenses, and we'll get into a bunch of that.
I was going to say, the ones I've worked with, instead of having them called percentages, you might look for them called ratios. Like it'll be a 1.75 to 1 or something along those lines. So if you, so instead of looking for percentages, if you look for ratios, that may maybe you'll find
bankers love to use a lot of ratios, like the quick ratio. They have all kinds of different ratios. And basically, a ratio is just, you know, it's a percentage, but they do refer to it as different ratios. So, very good point.
Awesome. So, any questions about discounts? That's kind of where we kind of spun off, and I apologize. Like, sometimes you get into these things, you're like, you really need to know this, and you really need to know this, and it helps people. Like, it actually helps people run their business. Please make sure that your profit percentage is where you want it, not your markup. And sometimes what you can do is you can actually reverse figure it. If I want to make this much, what do I have to mark it up? Then you're in where you want. But you just need to know that there is a disconnect between the two. Okay? Yes? Oh, I thought you had a question.
Nope, scratching.
No problem. Okay, so we've covered a couple basic things. What I'd like to do right now is actually just have you guys stand up for a second. We're going to take a micro break. This is just kind of a little shake up break, kind of like, okay, let's walk around for a minute, kind of just get up.
Check your phones.
You check your phones, whatever you need to do, that's fine.
Oh,